Welcome to our Financial Literacy Education series. My name is Corin Jacker. I'm from Priority One Wealth Management Group. During this series, we're going to cover a range of topics to help you better understand your money, to help you better engage with your money, and to help you make smarter decisions about your money. In today's episode, we're going to look at getting good advice if you need help about your money. Many people like to do things themselves. So some people, if they want to renovate the kitchen, will happily do it themselves, whereas others would get the professional builder in to do it for them. Managing your money is potentially no different. A lot of people, or some people, like to do it themselves, but many people come to the conclusion that they don't have the time, the knowledge, or the inclination, or a combination of all three, to look after their money themselves. So they're going to get value from getting good advice. So how do you get good advice? So some of the things that you should consider when talking to an advisor. First of all, understand the ownership of the business and the ownership of the license. If the business or the license is owned by an institution, whether it's a super fund, whether it's a bank, whether it's an insurance company, it can impact the advice that you can receive, and it can impact the solutions that they can provide you. Like any profession, it's important to understand the area of expertise and the experience of the advisor that you're talking to. And in financial planning, there's a new set of standards that the advisors must meet. And so it's important to understand their qualifications and technical skills. Going forward, advisors will need to hold a degree in financial planning or postgraduate diploma in financial planning or masters in financial planning. And they'll all need to have passed an industry-wide exam. So it's important to understand if that advisor meets those qualifications and standards, because if they don't, they may not be advising for much longer. In my view, it's important to get good independent advice. And what do we mean by independent advice? So independent advice means you're talking to an advisor who owns and operates their own business and their own Australian financial services licence. So they don't have any affiliation or ownership by any institutional product provider. Again, whether it's a super fund that they operate under, a bank, or an insurance company. They shouldn't accept any commission of any sort, including insurance products, because that, I think, in my opinion, creates a conflict of interest. Which is much the same reason why I think you should deal with an advisor that charges a flat dollar fee for the work needed to be done for the services you need. I think advisors who charge percentage-based fees, in my opinion, is just a commission by another name, because it creates a conflict of interest by giving them an incentive to put more money in a particular bucket because they get paid more income. So how does a good advisor operate? Well, a good advisor can be compared to a GP in the medicine world. So a general practitioner will know a lot about your health and well-being, but they'll have a range of specialists to call on where needed. So if you need brain surgery, your GP is not going to do it. They're going to send you to the specialist who knows how to do that job properly. So in financial planning, a financial planner will need to have a good understanding of taxation planning, insurance, cash flow and budgeting, debt management, superannuation and investments, and estate planning and structures that might be put in place for your investments. But we'll need to call on other professionals and specialists to assist with those. So an accountant will assist with your tax returns. A mortgage broker will assist with your lending requirements. A stockbroker or a property buyer's advocate might assist with specific investment making decisions. And a solicitor will help with things such as estate planning, wills and power of attorneys, or the legal structures that might need to be set in place. But what value can an advisor bring? So a good advisor brings value in a number of ways. So the first thing that they'll probably be considering is the strategies we need to look at. So if we're looking at somebody who's looking at wealth creation, so firstly we need to understand the cash flow in the budget to make sure we've got a surplus income that we can put towards wealth creation strategies. Then it'll be a matter of looking at things like investments in your own name, debt reduction if you've got loans, superannuation, gearing. We'll also need to consider things like insurance and risk management, estate planning. Then, once we've got those matters in place, we'll need to consider where the investments are made. So ensuring that you're making investments in the right assets that are appropriate for you and your objectives and for your level of risk that you're prepared to take. One of the most important ways a good advisor adds value, though, is through peace of mind. Understanding that you've got somebody who's working in your best interests to making sure you're making the right decisions about your money, but also holding you and perhaps others such as specialists to account so what needs to get done in relation to your money gets done. So now you've got a good understanding of what a good advisor can do and how they operate and how they can add value. You can go out now with a bit more information about getting help if you need help in this area. Keep an eye out for our other episodes in this series where we'll cover a wider range of topics to help you make better decisions about your money. Goodbye.